Good morning, everybody. Good afternoon. I'm going to speak about Atalaya. It's a Rio Tinto. We are the owners of the Rio Tinto copper project. We're in Spain, in Europe, producing. But first of all, I would like you to, while you read this, I'm sure you will have read it fast. We would like you to speak about a little bit about the copper. Copper. If you don't believe in copper, you should go and have a drink. We believe in copper. Copper has been used forever. Has been used for centuries, and it's going to still be used. It's going to be used in all kinds of electronics and all of our appliances, in all our houses, and especially in all the cities. And remember what I say: the cities, the growth of population in India and in China. Is moving from small towns to big towns. Everybody's talking, well, the copper price is down. And actually, if you look at the graph, red graph, we're down to levels of 2008 almost, which was when we had the crisis. Is the world in the crisis that we used to have in 2008? Well, mines have been cutting supplies. Lots of mines promise that they're going to be producing X, and they don't. Even with the result of the shut in production, the price has gone down to 16%. And looks all the bad news that it looks like there's no demand. But the other day, 2 days ago, Rio Tinto, Summer Wash, said that there is a metal in the world that has good fundamentals, it's copper. And I'll tell you why. The reality is that the market is quite balanced. And if you look at what happened in the past, when we had a crisis in 2008, and it looked like the world was falling down, how fast it recovered, and even having a huge stockpile of over 1 million tons. Look what we have now. The market is almost balanced. There's no way than the copper going up, and I will tell you why, even if China slows down. This is what everybody is saying. Well, the supply has continued to weaken, but anyway, the reality is that the copper has gone down. The reality is most of the mines, first, during history, they mined the better grades, but now the grades are slowing down. Most of the projects are behind the schedule. There's no new mine being built in the world, I can tell you, no new one. All the ones that have been built are being built now. New production are coming when this peak of price, investors decided to start and construct, and now we're getting the production 4 years later. It takes 4 or 5 years to build a mine. But there's no new mines being built, and they will never be built with these prices. It doesn't pay. So the price has to recover. People are talking about stockpiles. Well, look, in the right side you have the stockpile on LME, which doesn't show to be growing with these copper prices going down. Actually, the stockpile of 200,000 tons of copper is just 1% of the world's production. This is not barely 1 week of production, of consumption in the world. China has 500,000 tons of a stockpile. They can consume that in a couple of weeks. So believe me, there's no long-term problem for copper. The growth has been constant during the years, and it will continue to be growing. Infrastructure, 30 million people in China moving to towns. 30 million houses, 30 million appliances, fridges, everything. Some will be substituted by aluminum, but not all of it. Where is it going to come from? There's no new project. So I don't know if it's going to be in 2016 or 2017, but it's going to recover. Remember, China, it's all about China. All about China because China consumes 44% of the copper of the world. But China is creating a new stimulus. But we shouldn't forget that Indonesia, they also will need houses. They will also need wires. So, as I say, the demand is there. Even if it only grows at 2 or 3% per year, which is much lower than 6% in the past, 2% over 20 million tons is 400,000 tons of copper every year. New ones, added tons to the previous year. That means 10 mines like ours being built every year, or like a couple of new mines being built. And you have seen that some mines were built in the crisis after the spike of 2009, but there's no new mines. So the price will have to recover in 16, 17, 18 in an explosive way. This is more or less what I have been speaking about. So at the end, the incentive price you need for copper to be produced is around 325. So it's a big increase, almost 50%, 60% increase over the current prices. At those prices, our company, which is I'm going to speak about now, Atalaya, in one single year of production, one single year over the 15 years life, will produce more cash flow, almost double the cash flow of the current market cap. So that's why Atalaya. Why we think, and I'm not saying now, but why you think that an investment in Atalaya at these levels is something that will be a good investment in the years to come. I'm not talking about trading, I'm talking about an investment. And why is that? Because we are in Spain, in Europe, in a good jurisdiction, safe. The new copper of the world is coming from Congo, from Zambia, where they are cutting production at these prices already, all of them, from Peru, from Argentina, from Indonesia. Big capital intensities. The reason why we had a very low capital intensity, which is our second point, is because our project is in a place where they had houses, they had roads, electricity. We just connect to the grid. You have 80 kilometers away, you had a port. Our project was built at around $6,000 per ton of copper produced. Right now, the company that has no debt is trading around $4,000 per ton of copper produced. So you would buy an operating asset for $4,000, which is 4 times less than it costs to build a new mine in any part of the world. But for those mines to produce, to be built, to be approved by their boards with intensities in capital for around $15,000 to $20,000 per ton, you need, it's a pure mathematics, you need $325 per pound minimum. So even so, we are basically a free option to the copper price, highly leveraged, but we will be surviving even at these current prices because our cash costs are lower than the current copper prices. And we are financed, we have no debt. This is essential because there are lots of copper companies around the world, and some of them fantastic copper companies, but they have big debt. And the banks won't wait if there's 2 years of bad prices. If there's 2 years of bad prices in our case, okay, we won't make too much money, we'll just survive. But if there's bad copper prices with a company that has lots of debt, the banks will not wait, and they will take over the assets. It's very important to be fully financed with equity now, all equity. And we have, of course, exploration upside, although the best upside is really the copper price. So for those of you that don't know the project, the commission is on their way. We only started really putting money here less than about 1 year ago. But we produced copper concentrates already in August, basically still commissioning. Basically, we are almost there in the 5 million tons per year capacity. For those of you who don't know the project, this project is a brownfield project. It was once producing at 9 million tons a year, the maximum capacity about 15 years ago. So that was our target. We constructed this in 2 phases. The first was 5 million, which we have achieved already. Then we identified a second expansion of 50% higher to take us to a higher production very fast, which we're ahead of schedule. And we will be doubling our capacity to basically 9.5 million tons per year before the next year. And because we have done it in the first year, I think people are starting to believe that we're going to be repeat it. We have a deposit, basically it's a copper, an open pit, around 500,000, 600,000 tons of copper. Grade is 0.5, low strip ratio. Very much like most of the deposits, open pit deposits that you will find around the world in these new areas, Peru or Chile, except that we are already in production. If the copper prices went up, we would have around 900,000 tons of copper with similar grades, so basically extend the mine life in the same deposit. What we have there is a huge infrastructure. What you are seeing here, this kind of green, is the tailings, the old tailings pond. This is like 2 kilometers by 1.5 kilometers. It's big. In red, the plant area, connected with the grid, with waste dumps, already with a pit there, with water, with 2 dams of clean water, with, of course, all the licenses, only 80 kilometers away from the port. Now compare all these things with constructing a project in the middle of Indonesia where you have to barge the concentrates, you have to fly in, fly out your people, you have to construct a power plant. Remember, Cobre Panama, fantastic company, First Quantum in Panama. Only the power plant, $1 billion. Only the power plant. We just connect to the grid, 3 million euros. Slight difference. Why we went so fast? There's no magic. We saved a lot of money. We saved a lot of money with just common sense. Here in these pictures you see what we had, some examples of what we had and what we have. And you can see more if you come through our booth where we have a full set of pictures of the before and after. Just applying common sense, big crusher, huge crusher, about 3 times the capacity. That's how it is right now. Believe me, it's not just paint. We dismantle it, refurbish it, put it back again. Huge covered stockpile for ore, about a 1 football field. It looked crap. It was crap. This is how it looked. We took away all the roof, repainted, sandblasted all the beams, put it back again. Flotation. It was stopped 15 years ago. It corroded. Everything new, back again. So, as a result of that, we saved $60 million in direct costs, plus currency helped, the euro went down, and we also deferred some things that we didn't need. So this project was supposed to be needing 300 million to start up. With this, plus some other savings, we were able to start with less than half. It's almost embarrassing to say it. We cut the construction time from 36 months to less than 2 years. And we achieved the first production in less than 1 year since we went ahead. We didn't wait to get all the financing. We started constructing with the minimum money we had on hand, just ordering equipment. And we are doing this for the next expansion, the same thing, same approach. Since we got the money, we started already with expansion. You can see in the left picture how we were doing some excavations already for foundations for the expansion. Here is the foundations for the new mills, and that's the old mill. How we were producing concentrates already in August. And we plan to have this, let's say, the first phase up and running perfectly at the end of this year, beginning of next year. We are already at 90%. Next year, 50% production increase up to 7.5 million, which in theory was planned for about June. Again, we're pushing hard, see if we can get it before that. And what you see in the right picture is the expansion, how the expansion looks to 9.5 million. We forget about refurbishing inside. We don't have enough capacity to refurbish inside. And we construct big new cells. Look at the size of the cells compared to the size of the building. You see, this is the modern approach. That's why we are able to do it with a very good cost efficiency, because there are large machines outside with no building that you can service with cranes. And we are using the approach of Australia. And again, we think we will save some capital cost there, and we will be ready before our plan. Before I finish, a little bit of potential. Those of you who don't know, we own this land shown here in red. The deposits are east left, east-west, so the deposit will be like that. The whole area is full of deposits: Agua Blanca, copper, nickel, Landín, Las Cruces, First Quantum, Los Frailes is Grupo México. Not shown here is First Quantum. Here it's Trafigura, Aguas Teñidas, and this other place called Madalena, 4% copper. Neves Corvo in Portugal. The whole area has huge potential. We own some land here at the west. We'll see. So far, we have not had too much luck. And since this presentation is running, a very important point to say that we have four big shareholders that own roughly around 72%. Trafigura, HGC, which is a copper smelter in China, Orion from New York, and Liberty, which is the Liberty Mutual. People think, well, they control the company. Well, actually, they don't control the company. The good thing of this is that two of them cannot control the company. You need three of them getting together. But on the other hand, we had full support. We were able to finance this with equity. We have done what we promised to do, saving money. They're happy to give us money again if we need it, or to give us loans, or to keep us. Okay. They are all losing money from their last financing, but they are very confident because this is a long-term view. Slowly, we're increasing the coverage. Now we have Canaccord, Mirabaud, Peel Hunt, and Edison. Very soon we'll get BMO, Numis, and a few others that we are speaking with. They all visited the site. They're very happy what we have done, and everybody is saying the same thing. We are one of the companies one of the few companies that has delivered in these difficult times. We're fully financed with no equity. Sorry, with no debt, which is very important. We have a very good team, as we have demonstrated. People that deliver, they don't waste the time. In a very safe jurisdiction, with good supportive shareholders. What more can you think? So I think there's a case for our company, and I think it has been a big change. And I'm very happy and proud of my team. And if you want any more detail, please come through to my booth, and I will explain you in detail whatever you want. Thanks.